Another day, another two FUD stories on Tesla. Today, Elon's responded to one of them, and quite frankly, the only one that he should respond to, because the first one's, like, why did they even put this effort together? I was on the Refinitiv terminal today, and I saw this headline come through. I'm like, what is this? And I click on it. It's, these early Tesla bulls are giving up on the stock. Oh, good Lord. This is the kind of stuff that makes me think we are at a sentiment rock bottom for Tesla. But this is the story that we're going to talk about, as well as Elon Musk's response. So this morning, Laura has written a lot of negative pieces about Tesla. Laura has mentioned that Elon Musk ordered that Nvidia chips that were reserved by Tesla should be sent to XAI and X instead of Tesla. And so this is giving rise to the fears that here we go again, Elon and the distractions of other companies, the distractions of X and Twitter acquisition, the distraction of XAI, everything's a distraction versus what he should be doing, which is running Tesla, which in fairness, people can operate in multiple different businesses as long as they're fulfilling their duties, in this case as CEO of Tesla. Now, Elon responded to this. My first assumption, mind you, was that this was probably because they mentioned they're no longer compute constrained. That's Elon mentioned this. See, I wrote, this could be why Elon diverted some of the 12K H100 shipments, if true. Tesla is no longer AI training compute constrained, which is good. There are a few things that are good here. Number one, Tesla's in a position that's somewhat precarious from a cash flow point of view. Although I do think it's at a sentiment bottom, you kind of want to preserve a little bit of cash flow. So if you could take 12,000 chips that are supposed to show up, let's say in June, and go, hey, we don't really need those right now because we're training compute constrained and we don't even have the servers ready to set up for them. Let's just send them over to X and XAI, and Tesla can get the next batch, or maybe even Blackwell or whatever it is. Then you don't so much have to worry about it because, as Elon said, you're no longer AI training compute constrained. And I have to say, FSD has gotten really good at Tesla. Now, of course, at the same time as FSD gets really good at Tesla, yes, there is competition from China, which we're sheltered from thanks to really government policies, both from the Biden administration and the Trump administration back in the day, or a potential future Trump administration. A lot of barriers away from Chinese vehicles, but I don't really like investing in companies because the government is trying to protect me from their competitors. I think that Tesla's FSD is just at the front running of full self-driving in America. Now, don't get me wrong, other companies are going to do their best to have their own FSD. I just heard the Ford CEO literally say they are going to do their own software. It's because they realize that's where the money is. They're not going to license it from Tesla. That doesn't surprise me. Now, Tesla stock today still, though, it's consolidating around the 175 level. We bounced on the 174.16, pretty common, but this is pretty barcodey. Now, what you've seen a lot of days in the past is you get a rally into the close here, but no guarantees. Any kind of bullish short-term trades on this could get totally burned. But in the longer run, is Tesla having diverted some of these H100s to XAI a big deal? Probably not. It's probably not going to hold anything back from full self-driving. It is, though, going to get a lot of attention in the news today. Now, Elon did specifically reply, and he says Tesla has no place to send the Nvidia chips to turn them on, so they would have just sat in the warehouse. Right, but Tesla would have also had to pay for them. And you can bump your cash flow, or it can be less negative if you have another company pay for them. And remember, XAI just got a big multi-billion-dollar investment round. They raised like $6 billion. Okay, well, that's interesting because 12,000 chips at about $30,000 a piece is, if I do this math correctly, it's $4.2 billion, I believe. Oh, no, I'm sorry. It's only $420 million. Okay, whatever. Point is, you have more capital available, fresh cash available to go shop for those chips and then set up server clusters or whatever you want to do. And now you don't have to spend that money over at Tesla. And if you're not training compute restrained anyway, then what's the rush? Why spend the money at this point? So to me, it sounds like inventory management, but to people who don't like Tesla, they're going to look at this as a conflict of interest. And I get that. Like, a lot of people look at Elon and they're like, too many conflicts with other businesses. And this kind of feeds into that narrative, especially since when you look at the article is based apparently on emails that CNBC reviewed between individuals at Nvidia. And again, Elon did not dispute that these emails have taken place. He just gave an alternate explanation for why. And that's usually why stuff like this happens. There's usually a reason. However, it's still not a good look for Elon in the lead up to his stock comp plan. What would a better solution have been for Elon here? Well, maybe rather than Elon just deciding it, have a conversation with the board. Hey, we're not training compute constrained. We don't really need the chips right now. It could benefit our free cash flow if we let one of the affiliated companies or other companies take the order rather than us. And maybe those companies can even pay Tesla like, hey, thanks for letting us take your reservation fee or whatever. Then the board votes on it. They sign off on it. You document it. Boom. And then you could put out a statement ahead of this leaking in CNBC and going, hey, just FYI, we think we're good. We're so good with, we want to make an announcement. We think we're so set with training right now. What we've done is we've recognized some revenue for giving up a reservation to some affiliated companies. The board approved this. The board voted on this. And we actually think it's a sign that we're so close on full self-driving on Tesla that it's actually bullish. Now, maybe I'm biased. I mean, I don't have as large of a position and exposure to Tesla as I used to have. I used to have a substantially larger position, but I'm exposed to Tesla. I've just diversified. And that's because in this environment, I think it's going to take a whole lot longer for rates to come down than we really want to believe. I made a video, which you should watch this morning, on how long it took inflation to come down between 1990 to 1999 and how much it came down. You should watch that video. It was a really good video on the channel this morning. I'll get the title for you so you could just search the title. But it's a really good video, and it talks about the ECB and the implications for potential investment opportunities in America as well for rate cuts. And yeah, it's central bank rate cuts start this week. It's a reference to the ECB, but it's you know, what's being priced in right now. And if you're not aware of it and its implications for America, watch that video. Central bank rate cuts to start this week. But the time it takes for those rates to come down, I think, unfortunately, will be a net negative for Tesla in the long term because Tesla's just going to have to keep financing those buy downs. Now, I do think those buy downs are going to lead to some pretty sick delivery numbers. So I'm pretty excited about a pop in deliveries from that 0.99% financing rate that you ended up having. It's pretty exciting. But then again, we can't guarantee that the numbers are going to be positive, and they could still be net year over year negative. In fact, that's what a lot of analysts are thinking right now. I know Gary Black is thinking the numbers are going to be negative year over year. I think Tesla, let's see here, Troy posted on his public post here, Tesla sales in Europe have been fairly steady, ranging between 85 to 94K over the past week. This quarter is expected to be clearly lower based on registration data so far, so still expecting that negative sort of delivery and production figure. The same is true for lower than analyst estimates for deliveries for the second quarter. Probably by a lot of estimates trending somewhere between 10 to 15% below expectations of where things might go. So we'll see. We'll see what happens on the day. I think on the day, it's going to be the same thing where you're just consolidation until the end of the day and you're sort of hoping for a rally into the close. No guarantees, but that's my expectation. And then as far as the longer term for Tesla, it's an interest rate sensitive play, so you got to really have like diamond balls, we like to say, to hold on for the long term. But I think once we get this catalyst over of the stock comp plan, whether it passes or not, I kind of think it won't. But if it does, great, bullish. If it doesn't pass, fine, they'll come up with a new plan. There'll be another solution that'll be put up for a vote. So that's my thesis, and I'm sticking to it. But that's my take on Tesla today. Thanks so much for watching. We'll see you in the next one. Goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.